Today we're breaking down BOTT, the Themes Robotics and Automation ETF, a passively managed ETF focused specifically on the rapidly evolving world of humanoid robotics and automation. This is not a broad technology ETF, and it's not a diversified robotics fund in the traditional sense. BOTT is designed to track a narrow, highly thematic index that concentrates on companies most directly exposed to humanoid robotics. BOT tracks an index that selects 30 global companies involved in areas such as service robots, industrial robotics, autonomous systems, assistive and wearable robots, and the enabling AI and hardware that make these systems possible. The fund's goal is to capture companies that are not just adjacent to robotics, but that derive meaningful revenue from humanoid and advanced robotic technologies. What makes BOTT's index construction unique is how companies are selected and weighted. The index provider uses a proprietary AI system called ARTIS to score the eligible universe of companies. This system evaluates factors such as revenue exposure to humanoid robotics, market capitalization ranking, and positive total return over the prior 12 months. Based on these inputs, the top 30 scoring companies are selected for inclusion. The index is rebalanced quarterly, with reviews conducted 20 business days prior to the rebalance date. Rebalances occur on the first Wednesday of February, May, August, and November. This regular rebalancing allows the index to adjust as leadership within the humanoid robotics space changes, but it also means holdings can shift meaningfully over time. Once selected, companies are weighted based on their revenue exposure to humanoid robotics, rather than market capitalization alone. Individual positions are capped at 4.5%, which helps limit single-stock concentration, but the fund is still highly concentrated by theme. Sector weights can and do change, depending on where robotics revenue is emerging, and the fund does not rotate into defensive sectors during market stress. BOT is also global in scope. The fund can invest across multiple regions, including companies listed in the United States, Europe, Asia, and China. It is permitted to hold China A, B, H, N, P, and S shares while explicitly excluding sanctioned securities. This global flexibility allows exposure to regions that are heavily investing in robotics, but it also introduces geopolitical and regulatory risk. It's important to understand what BOTT is not. This is not a defensive ETF, and it is not designed to reduce drawdowns during market downturns. Because the fund stays fully invested in a narrow growth theme, performance can be volatile, especially when investor sentiment toward emerging technology shifts. Returns will be driven primarily by the success or failure of humanoid robotics adoption. Another key point is that while BOTT is passively managed, it is not a simple market cap index. The index methodology is rules-based but highly selective, relying on AI-driven scoring and thematic purity. This makes BOTT behave more like a high-conviction thematic ETF than a broad technology allocation. Prior to August 18, 2025, the fund tracked the Solactive Industrial Robotics and Automation Index. The transition to a humanoid-focused index reflects a deliberate shift toward a narrower, more forward-looking robotics theme. The bottom line is this: BOTT offers targeted exposure to the humanoid robotics ecosystem, focusing on companies with real revenue ties to automation and advanced robotics technologies. It is best suited for investors who understand thematic risk, believe in long-term robotics adoption, and are comfortable with volatility in exchange for concentrated growth potential. If you found this breakdown helpful, make sure to like the video, subscribe to the ETF Investor, and comment below. Do you see humanoid robotics as a long-term investment theme, or is this too speculative for your portfolio?